What's up, guys? This is Chris. Welcome back to my channel. And over the past few days, the market sell-off has gotten even worse. Right here, I'm even wearing this red shirt underneath because, that's the only color we're seeing these days in the market. And this is as of recording on Thursday. Might get better, might get worse on Friday and beyond. We'll see. But in this video, I want to really highlight and educate you guys and bring a lot of value by showing the real truth behind these sell-offs and the past precedent, what we can learn from history in a very similar example to this 5 years ago in the market, almost to the day. And this is going to help you understand what's going on and how to approach the market in the next several months, even 6 to 12 months from now. Right? I say 6 to 12 months, not just because it might take that long for things to recover. I personally don't think so. I think this could blow over in a month or two. At this point in time, I think a lot of people are frankly aware of this all too painfully, is that short-term investing and short-term speculation is going to kick your ass at one point or another. Right now I'm seeing a lot of people in super high growth, super high valuation stocks that have gone down 50%. And frankly, I'm talking about a lot of SPACs too. Everyone loves SPACs. The glory days where you buy a SPAC and it goes up 100% and no one even bats an eye at that point. You could just buy any random SPAC and it goes up on a merger agreement. I think those days are over for now, for sure. And now you're seeing, all of a sudden everyone wants to buy airlines, everyone wants to buy restaurant stocks, everyone wants to buy entertainment stocks, casino stocks, and dump all the growth stocks because when the economy goes back to normal, people are gonna spend a lot more money on the airline type of industries, and everyone wants to put their money there. Everyone wants to forget what worked last year, right? The thing is, a lot of people need to be aware of, before you start dumping all of your growth stocks, is to understand that a lot of those, what we call cyclical stocks that go up with inflation and go up with real spending in the economy and prices going up, is that a lot of those moves are frankly quite short-lived in general. Right? We've had inflation scares in the past. I think everyone is just super fearful right now that it's just going to go out of control. I'm going to see 2%, 3%, 4%, 5% type of rates out there. And it's all of a sudden going to be not worth investing in a growth stock when you could just buy some of those cyclical stocks and put your money in some savings and some bonds. But we need to look at the real history behind this. So if we go back to 2016, I'm going to show you a chart right here. You're going to see, as well as these news reports and headlines, late 2015, inflation is going to be the big news in 2016. That's going to be everything that matters in the market. No one's going to care about anything else except inflation. And look what happened with the yields that year. All right, guys, so I have the US 10-year Treasury here. You could see that throughout the early 2016, rates were really insane, actually. Right, the first half of that year, you see that yields went anywhere from 1.5 to 2.2. And in some months, it went from 1.4 to 1.9. Before eventually, rates kept starting to increase gradually over time and into 2017 as well. All right, 2018. But, before peaking around 3% there. But let's take a real look at what exactly did stocks do during that time, because I want to understand, what the market was doing and how it was reacting to all of this going on. So what you can see right here, I want to show you specifically Facebook stock. Okay, Facebook stock peaked around 110. November 2015, it dropped all the way to 89 as the low. However, right, this does not necessarily mean that Facebook stock is going to keep going down and down and down as rates keep going up and up and up. You can actually see that it's the opposite. Once it peaked, or once it troughed at 89, that stock kept going up into 2016, right, throughout the rest of that year, right? January, February, March, April, May, June. Okay, and even towards 2017, okay, 2017, this stock was way higher, okay? 89, it went up to 100, 130, okay? Before having another drop there. So, by all means, I don't think that this is doom and gloom and the end of growth stocks. Believe it or not, back in 2016, Facebook, for example, was one of those super highly expensive growth stocks. Okay, it was a profitable stock at that time, but the PE ratio was around 90. Okay, and they were doing net profits of around $5 billion or something like that. The revenue was a lot less than what it is now, and they were doing 44% growth year over year. Okay, those are good numbers, but again, you might say it is an expensive stock at a PE ratio like that. And there are a lot of stocks right now, like Facebook of 2016, where they're so-called expensive and they're getting sold off right now. They could be really good in the future, but right now people are very short-sighted and they're just selling those stocks. I think a lot of stocks that I'm personally in fit in that category. I think an IPOE or a GIK at these prices is just insane. A $10 stock price, a $15 stock price, when in a couple of years these are going to be very, 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 very profitable companies. And let's even go beyond the SPACs, right? If you just buy an Nvidia, which trades at a forward P of around 30 at this point or something like that, a Salesforce, which has come down a lot. These are companies that are going to be around for many, many years to come and providing some real financial results. Again, that's focused on the long-term future. Long-term versus short-term profits. I'm going to take long-term right here. Okay? So in terms of the broader index now, if you look at the Nasdaq, overall, what did the Nasdaq do with rising rates? Well, I'm going to show you that. Okay, so January 2016, again, you see that bottom right there. Nasdaq, believe it or not, was 4,200. Okay, again, long-term perspective, no one even remembers this stuff, right? In the grand scheme of things, these corrections, because what happens after a correction? Throughout history, stocks go up. Okay, and this correction also happened to be around 20%. It might happen again, it might not, but you can see here 5,200-ish on the Nasdaq, 4,200, that's about 20%, and then we're right back up. And that index over the course of 2016 and 2017 did go up, right? After that bottom, it did go up around 20% back up. And then the following year really, really took off. And this is with inflation, guys. This is all with inflation. So it's not like because of inflation, no one's going to buy growth stocks anymore. No one's going to buy tech stocks anymore. This is such an inaccurate fallacy, right? It actually makes no sense whatsoever. And it's not backed by history really whatsoever, right? Go back to the previous times of inflation. I'm sure you'll find the same thing, okay? But at least in modern times, you need to really understand here that this is not really a time to just dump all of your tech stocks, dump all of your stocks. Again, 2018, December, inflation scares were there, right? Rising rates, blah, blah, blah. The Fed is going to go crazy on us, all right? Stocks went down a lot, again, around 20% correction, okay? 6,200, 8,000, okay? What happened after that? Stocks go up. So be very mindful here about getting too bearish and getting too fearful and, just panicking. If you look at the history and the trends, you actually know what is probably going to happen. All right. And quite frankly, right here, you could see, okay, we hit some areas on the chart here in the Nasdaq today. Actually, some key supports. We've gone through some supports. We've dropped around 11% already. Who knows? It might go to 20. All right, 20 would be around this area right here, if I'm not mistaken. Who knows? But the thing is, you have to keep a level head and trade with the plan. With that being said, guys, I hope this was insightful, informative, and helps put things in perspective, because things might seem crazy now, but is really not that crazy when you think about the whole market and the history of it in the grand scheme of things, and inflation not being like new. It's not some kind of new it's not a kind of new flavor of a donut or something. So I'll see you guys in the next video. Stay well, and remember to invest responsibly.